They say that death and taxes are the sure things in life. And today we're going to talk about one of them. So today's topic is taxes relating to short-term rentals. And we'll go around the room and chime in on ideas and things that each one of us does in our own businesses, from structuring companies to deductions, etc.
A spooky topic for Halloween week.
Yeah.
I'll start first. So, how I structure my company is a corporation. I find the tax benefits significant in comparison to what you guys would call an LLC, or here that would just be a sole proprietor. It's quite significant, although there's, legal annual filings and accounting can be significant. It still calculates to be worth it for us. And then on the business side for management, I don't have any of my owner's money running through my company, so I don't have any tax liability. They're responsible for submitting their taxes, their occupancy taxes, anything that's required, and then I am out of the picture when it comes to the auditing process for their individual properties. Here in our province, if you are a licensed property management company, you're actually required to go through the audit process for the first 3 years, which can be tens of thousands of dollars every year in accounting fees. No, thank you. So by having all of the money, none of it's held in trust, all of the money is the owner's responsibility. There's tax liability is theirs. I've taken myself out of that, and the only thing that I'm responsible for managing is my own books, which are our commissions and our cost of goods.
So we do the opposite. We take in all the money from Airbnb, VRBO, direct, and at the end of each month we put together owner statements and we pay out the amount that each one of the clients receives. It's a bit of a different model. It does mean that from a total revenues perspective, our revenues are really high, which can be a really good thing. But of course, we only get taxed on what the end result is, which is much lower. So, in terms of structure, I have a business partner, and we have the main company is an LLC. We have Luxury Stay Rentals LLC, which is our main entity. And then I have an LLC, and my business partner has an LLC. So these two LLCs are partnership LLCs that are under the main company. So it's sort of like a triangle type structure. And in terms of taxes, the revenues from my LLC get passed along from my personal taxes. So I don't file a separate tax return for my LLC. It's my own return.
So I'm going to jump in on this on the taxes debate. Great topic, but very poignant at the moment. As I shared with you guys just before we started recording, I've actually got a tax audit happening here in the UK for one of my businesses. So I've got a lot to say on tax, and certainly people can hopefully learn from my mistakes and things like that. So for me, as you know, this isn't tax advice, but this is just experience from my own meandering sort of experience in business. The number one thing is it depends on what you're trying to do. And for me, originally, I started off with an arbitrage business, and I've got a limited company structure in the UK. So instead of doing it as a sole trader or as a partnership, I had done it as a limited company. And the reason for that is to protect against if there was somebody trying to go after, say somebody slipped down the stairs in one of the properties and tried to sue me, they'd have to sue the limited company, not me personally, which is why we've gone for that limited company structure. The only drawback is because it's a separate private entity, then of course you've got accountancy fees, and it's worth just building this into your business projections. If you're setting up a company from scratch, that you'll need to have some good advice when it comes down to taxes, and somebody usually to do the company returns, because a limited company returns here in the UK is usually, depending on the structure, beyond most people's preference to do themselves. So it's something to think about. And then for me, I then went on to start to manage other people's homes. And at that stage, I split the business. I made two companies, and the second company is a management only company, and it actually manages all the clients' homes that we look after, but it also now manages my arbitrage ones. And the way this works is, for the management company, we had to set up a separate client account, and that is ring-fenced money. So a bit like you, Lawrence, every bit of income goes into one account. And then what we do is we have the reports, we split it out, and we pay that to the owner. So we do take in the money and we pay that out to the owners each month. And I also pay my original limited company, the arbitrage company, as well. As part of that, I then just take dividends from these companies, as opposed to paying myself a salary, which, again, it depending on your current status, may be the most tax efficient way. Again, you'd need to consult a tax advisor for that. But one of the things which I didn't expect, and this is something to watch out for, and this is part of the reason for the audit, is a VAT audit. So here in the UK, when any company earns more than 90,000, then you do then need to be registered for VAT, and that means that 20% of everything you earn will get put into a separate account, and you'll need to pay your VAT bill, or you'll need to mark up your prices to include VAT. And that means that if you're serving midterm stays and businesses, if they're VAT registered companies, they can claim the VAT back. They can claim back that 20%. So you're much more likely, when you hit the VAT threshold, to have companies come and stay, because if it is what they class as the end consumer of that, which, if there's a guest just staying for a weekend, that they are the end consumer, they will not be able to claim back the VAT because they're not VAT registered. So in the management company, as the same as you, Lawrence, the turnover is quite high, but we are only, because of the style of company it is, you're only VATable on any of your commission, which is your real sales within that company. So just because we take 600,000, 700,000, whatever it is in terms of turnover, it doesn't mean that total amount is VATable, because it's just on the management company if we go over that 90,000 as our commission. So that's separate. However, on the rent to rent company, that same thing doesn't apply. So the turnover of, say, a 2-bedroom house here in the UK is somewhere between 25 and 35,000 in most cases, and we had 6 rent to rents, and that means that we've gone over that 90,000 threshold. Now, the benefit here in the UK is there is something called Tour Operator Margin Scheme, and that is shortened to TOMS. The idea of this scheme is really meant for hotels, and it's really meant for a hotel which may need a big refurb. They could rent another hotel, and the cost and the turnover of having the two, basically they could offset the lease cost or the rental that they pay. So that then, say the income was 90,000, but the rent was 90,000, then it would be zero, they'd be under, just as a little example there. So for all of my rent to rent, the arbitrage properties, I can actually take all of my rent commitment and I can add that to the 90,000 allowance that they give me, and that will reduce the amount of VATable what I'd need to pay. So in other words, say my allowance was 90,000 and my rent 60,000, then I've got £150,000 before I ever reach that amount where the government will say, hey, you've got to start charging that 20% on top of everything. So this is something to really watch out for in the UK, because from the first of the month after you've gone over, so if I had a turnover of, in this instance, £150,001, from the first of the month of the next month that applies, after that point where I've gone over, I would need to charge 20% more, and then retrospectively you'd owe 20% on anything, any of the transactions. Unfortunately for me, I've gone over, and that was some months ago, so I'm going to have a bill coming to me. But this is something which I would advise, make sure you get really good advice. I did think I had that advice, but unfortunately wasn't advised at the time. So make sure you're asking questions of your accountant. Ultimately, it is you as the business owner, or me as the responsible person. So just make sure if something, if you're getting a bit worried about your tax commitments, make sure you're asking those questions, making sure you're getting on calls with tax advisors. The last thing I'm just going to share before we move on to the next person, who knew I had so much to say about tax, is that you can save here in the UK, you can save something called council tax if you've got a rent to rent or an arbitrage property. It just means that because you're a trading business, you can switch from council tax on any of your properties. You can switch to business rates instead. You can let them know you're a trading business. They will move you from council tax, which you're probably paying £2,000 per year on, and they'll move you over to business rates. The business rates may be a little bit higher, but if it is your first one, you can apply for business rates relief, and they will reduce that by 100% on your first one, and then it'll step down on your second, and you may lose it by the third one, fourth one as your business grows. But the idea is that this is a relief from the government to help small businesses get started. And that means that you can, instead of paying the £2,000 per year on your monthly, bi-monthly or all in one, it means that you can save that money, especially when you're getting started. It's a really great thing to do and the right thing to do. So there are some good loopholes out there.
Thank you for that, Liam. And I should have I should have mentioned this at the very beginning of the conversation, and it goes without saying, but none of us are accountants or lawyers. So any of this is just general advice. And for specifics, please go to your accountant or your lawyer to get specifics for your area. Okay, so who would like to go next?
Well, yeah, I'd like to second the thing about professional advice. I'll go real simple here. I would just say I'm a big believer in having a real life human bookkeeper. I know there's lots of software services and everything else. Having a bookkeeper has really helped so much. For example, if you use Airbnb to any kind of extent, if you ever have to refund money or anything, they're always refunding it to the wrong account, because I have a mixture of arbitrage versus managed versus place that I own, and they'll just take it out of the next payout, whatever the refund is, no matter where it came from. And honestly, it's the bookkeeper who finds the stuff. I don't go back and review all the different things. And he finds all kinds of mistakes, but also we have quarterly conferences where I actually find out if I made money or lost money, because I always see all this money coming in and I see all this money coming out, but I really never know if I'm making money.
Mm.
And then he can prepare stuff at the end of the year for my accountant, which is also super helpful, especially since I have these 3 different business models operating simultaneously. And then the other thing is the local taxes. So Airbnb has various things with various cities where they'll pay the local taxes, but they don't do that for everywhere. But also on direct bookings, there's no taxes collected. So I have to collect those taxes, not only from the guests, but then I have to push those off to the owners. And then the owners are going to be responsible, right? You have to be able to tell the owners how much that's going to be, and I have to make sure to pay the owners. So the bookkeeper handles all that stuff. And I know there's lots of software services that claim to do that, but I can only just say, guys saved me a lot of times over the years. And the main thing is I don't have to deal with it, and that has a value to me. So I'm going to seek out the professional, just find a good one.
Good advice. And find someone who is knowledgeable specifically about the short-term rental industry. Don't use a general accountant, or you need to find someone who knows all the loopholes and specifics of this industry. Ray, how about yourself?
Yeah, I'd like to second that as well. I think a bookkeeper who has the experience in your industry, specifically short-term rental industry, and also on top of that, they are familiar with the jurisdiction of the state, country, or city that you're in, and they know kind of like the ins and outs of what they can do as a bookkeeper or even an accountant. So if you're hiring a VA from a different country, then you need to make sure you're asking the right questions, like, hey, have you supported anyone in California before? Tell me about that, X, Y, and Z. Really dig deep and do your due diligence on getting people's experience and making sure that they actually are able to help you within your industry and your city. So I have kind of a hybrid for how I've set up all of my properties. I am under an LLC, and it's filed under an S corp, and I take dividends against it. And the reason I set it up that way is similar to Liam, where I wanted to make sure I was protected with limited liability on my end. because I was doing at the very start of my business rental arbitrage. I wanted to make sure I was protected from the guest side and also from any owners that I work with in case, things go sour. And then on top of that too, I wanted to work with bigger apartment complexes. And to be able to work with bigger apartment complexes here in the United States, you have to have a business EIN. And if you don't have that, they can't really pull any information on the back end for your personal credit. One, that's really dangerous for you to personally guarantee on, big leases. So if you're picking up 5 to 10 leases under your own personal social security number, and again, things go south, you are now personally liable to pay those back if you can't pay it. So it's better to protect yourself and go through an LLC process, but also if you're working with these bigger companies like Gray Stars and whatnot of the US, they do require for a business EIN and business entity to underwrite their leases against. So with the arbitrage model, we collect all of the payments because we don't work with any sort of owners. And so our tax liability is against that revenue. I've had set up before with our co-hosted properties where we collect the payment from Airbnb and direct bookings, and then we distribute that out every month to the owners. What we have found is that if you don't do your bookkeeping correctly, your tax liabilities go kind of haywire. And actually, your bookkeeper has a way harder job. So you're adding work to them. So what we've done now is we've set up Airbnb accounts separate for every single owner that isn't part of ours. And then we just go on top of that listing as a co-host for that specific listing. So that way, all the distributions for Airbnb go directly to our owners and not through the company anymore. And then on the back end, we're now able to distribute out the co-host payouts based on the percentage that we charge for commission, which is between 20 to 25%. And then we also add our cleaners onto the co-hosted listings as another co-host. And then on the Airbnb side, they can now redistribute a specific dollar amount. So if it's $250 per clean, that goes directly to our cleaning team. That makes it a lot easier for our bookkeeper to kind of just see the revenue coming in for the co-hosts, and then not have to deduct anything for the rentals from that we distribute out to the owner. So that was the main lesson that I learned this year, was to set it up that way. Because again, outside of the tax implications, it also has really damning things. When one of your properties has a cancellation, it affects your entire portfolio. So say listing A has a cancellation, and then you have to refund that back to the guest. Airbnb then pulls that payment out of your next reservation. But I found out that it's not that reservation for that listing. It's now that reservation will pull out from the entire portfolio. So if it's for another co-hosted property, then you're kind of, stuck. Those payments are now going to a different owner, and it's not for them. And now you're dealing with the backlash from another owner saying, "Hey, where's my payment? What's happening?"
Been there.
So,
Yeah.
I'm currently dealing with that now. So
So-
that's why we set it up that way.
You're essentially co-hosting. Does that where do the reviews go then on all of those bookings? Do you collect any of those on your account?
You guys can correct me if I'm wrong, but if you are the main host, if they make you the dedicated host for that listing, I think you still get the reviews, right? Don't you share it?
I am set up. I did this with Airbnb. I met this head of pro teams at VRMA one year, and I joined their beta program, and they put me on. It's like an Airbnb hosting team. You can't find it without the link, but it's there available for you. It's kind of like co-hosting, but you have access to more details, more information than a co-host account would. And those reviews do not follow me, unfortunately. So I don't show thousands of reviews connected to my account. It's for each individual property. That hasn't hindered me. Does it make me look like I have less experience? Sure, but from the outside perspective, yes, but if someone's looking at me like, okay, well, how experienced is she? But one look at my website or talking to me, you'll know I've got experience in this space. But it has saved me doing it separate. The reviews, I could care less. The amount of money, headache, because I did that once. I started a luxury Airbnb account and I put my luxury properties just on that one. And sure enough, we had a cancellation after the money was paid out. I did not agree to the cancellation. And then other reservations started taking out of that. It was like $16,000 that Airbnb wanted back. And so it caused a huge mess. I had to have one owner send payment to another owner for reimbursement. So I just canceled that account and I kept $15,000 in that one owner's account that got paid out that was getting refunded through another. It was a mess. I will never do it again. I knew not to do it because I'd seen all the horror stories, but I was like, no, I want to have all the luxury properties all together and never do it again. Never.
Yeah, Dina, I'm going to have to talk to you
That's
after
why I
this
would
call.
say that it may be simpler to have everything come into your account and then you do the accounting at the end of the month in the statements. But there are pluses and minuses both ways.
You're way
So I get it.
more vulnerable that way, for sure.
Well, you're right. I mean, there are definitely pluses and minuses to doing it that way.
Yeah. It does help. And one thing I do want to piggyback on is, I understand Dina's look at that and strategy, because I was the same way. Like, I wanted to make sure the branding was under one name and not under multiple. And then you could show up as the main host for that specific listing. And then anyone who is coming into that listing knows they trust you that you're going to have a good stay with this property, because it's going to show, branding A in the top line and not the listing owner. So one thing, I did make a change to our listings. So our owners still own those listings, but we have the password and everything, but on the icon itself for the pictures, it's still our branding.
I actually changed the name. I say the first name is the name of the property, so Monty, and then last name is by Keys to Kelowna, or vice versa. We switch it up sometimes, but after you do that identification verification, you can change your first and last name.
Okay,
so,
great.
And then the logo.
How do you then identify?
Yeah, and then the logo is
okay.
mine.
Well, one last thing I want to just add, bringing it back to the taxes side of things, and this is something which Ray has just reminded me of, is that depending on the structure, especially if you're looking to do multiple things like purchasing, obviously arbitrage, management, or co-hosting, then we purchased for the first time in the last 12 months, and it's made me realize that very soon, depending on what happens in the future, is to look at perhaps having a company group structure. And this is what a few investor friends of mine do, where you have one entity which actually becomes a director of the next company. And what that means is you can actually move money from multiple companies. So say you've got company A, B, and C is owned as a director is another company, another limited company called X. Well, actually, if company A and B made a profit, but company C didn't, you can actually use that group structure to move the money around. And then that way you'll pay less tax, because as a group, you didn't make as much profit. And, obviously, you can move the money around. This is something which, you've usually got to be earning quite a bit across a few companies to really make this worthwhile, because to set it up costs quite a lot. But in the right situation, that's a great way to save tax. And there's something which I would definitely consider in the future.
That's exactly what I wanted to add. So a great resource that I learned at the STR Wealth Conference, the STR Law guys. They might be American, but their strategies are global. It's called layered asset protection, and is exactly that, where you layer the companies and then you pay out dividends to company X. Company X then pays out dividends to each individual partner. Let's say something happens. If something happens, and it's not if, it's when, and they see blood in the water, the lawyers see money to be had. If you have layered protection, then they see, well, company X is actually at a deficit because they've paid out all the partners. The partners are numbered companies. You can't track them. You can't find them. You can't hunt them down. You can't take all their money. Everything is protected, because still at the end of the day, I have a corporation, but somebody could come after me. I am the face of it and I have assets. So I would check out their website. I think there's some good YouTube videos, podcasts, STR Law Guys. I really loved the presentation at the STR Wealth Conference. And that is always in the back of my head when setting up another business is you've got to layer it. It's got to be separate from the next. And it is a little expensive, but at the end of the day, it's insurance.
Wow, good advice. That's great. Well, I think that we've covered some really good things on this topic, and we meet once a week. We are hosts from around the world, and we talk about a different topic each week. So if you're watching this on YouTube, please subscribe to the channel. Please like the video if you got good information from it. And if you have any questions on this topic, feel free to leave comments below. And also feel free to suggest other topics that we can use for other podcasts. So for our next podcast, which is next week, Liam, do you want to let everyone know what that topic is?
I don't know if I could share the screen on here, so I've already just done it, but it is creating a welcome guide that guests actually read. So we'll dive into that topic, how to create a welcome guide that actually your guests are going to use and read.
There you go. Well, thanks everyone for watching, and we look forward to seeing you on the next episode of The Real Hosts of Short-Term Rentals. Take care, and bye-bye for now.